Hello, and welcome back to the Mortgage Porter Weekly. I'm Rhonda Porter, mortgage advisor in the greater Seattle area, helping home buyers and homeowners throughout Washington State. This is your update for the week of June 15th, 2026. Last week, we got the May CPI and PPI readings, and inflation is still running hot. Consumer prices rose 0.5% for the month and are up 4.2% from a year ago, with higher gas and energy costs driving much of that increase. On the jobs front, new unemployment claims rose for a third straight week to around 229,000, and continuing claims remain elevated, which tells us that people who are out of work are taking longer to find new jobs. On the international front, it appears that the U.S. and Iran have reached an interim agreement to reopen the Strait of Hormuz, with a formal signing expected in Switzerland on Friday. So if this holds, it could be meaningful for oil prices, and that should be good news for mortgage rates. Let's hope this conflict is over. According to the Optimal Blue Index, the average rate for a 30-year fixed mortgage as of last Friday, June 12th, was 6.476%. This is a slight improvement from last week's update. A quick reminder about this number: the Optimal Blue Index reflects roughly 35% of mortgage transactions from lenders who use their platform when they go in to lock in an interest rate. So it's not a benchmark and it's not a quote. So you can't lock in a rate from last Friday. And your actual rate is going to depend on your credit score, loan to value ratio, and other specific factors about your personal situation. So this is just to give you an idea of where rates are trending. And so if you would like to have a rate quote that is current and not from last Friday, and that's based on your personal financial scenario, please reach out to me. I'm happy to provide that for you. No credit pull is required. I really try to make it easy for you. Here's what's on the economic calendar this week. Monday brings the Empire State Manufacturing Index and industrial production and capacity utilization data. Tuesday, we get the ADP weekly employment report and housing starts. Wednesday is the big one. We have retail sales, pending home sales, and the Fed's rate announcement. Thursday wraps up the week with jobless claims and the Philadelphia Fed Index. Friday is a holiday, and so there is no reports. Friday's Juneteenth. So in that said, all eyes are really going to be on the Iran situation and oil prices, and those headlines are going to be driving more of the rate action again this week, more than anything that we have on the economic calendar. And it is Fed week. On Wednesday, we will hear from Fed Chair Warsh and what will be his first rate announcement. Markets are widely expecting no change to the federal funds rate at this meeting, so don't hold your breath for a cut just yet. But the press conference will still be worth watching for any signals out there about where things are heading. It's 11:30 Pacific time, and mortgage-backed securities are improving today. And as I prepare this for you, the Dow is up 565 points. The optimism around the potential peace agreement with Iran is helping push bond prices up. And when bond prices go up, mortgage rates tend to move down. So we'll keep watching to see how this develops throughout the week. This week, I want to talk about something that a lot of homeowners are thinking about right now, and that's using a cash out refinance to help consolidate or restructure debt. I recently helped a couple reduce their monthly payments by refinancing their mortgage, and they're saving about $2,000 a month. So if you're carrying high interest credit card debt, the equity in your home might be one of your best tools to help get rid of it. The key is acting before things get too tight and before there are any late payments or before your credit utilization gets stretched out too far. The sooner we take a look at restructuring your debt, the better your options may be. And it doesn't hurt for us to have a conversation and just review where you're at now. It doesn't mean that you have to take action, but having numbers and information in front of you so you can make an informed decision, I think, is really, really important. So I've written more about this on my blog, and I'll have a link in the description, and I'm happy to run through your specific numbers if you want to explore and take a look to see what this could look like for you. So before I let you go, I'd like to ask a quick favor. I've been nominated as one of the top mortgage lenders in the Seattle Times Best of the Pacific Northwest, and I would be so grateful for your vote. The good news with this is that you don't have to log in or give out your email address, and you can vote every day if you want to. So the link is in the description below, and I thank you so much for watching Mortgage Porter Weekly. If you have any questions about buying, refinancing, or just trying to figure out what your options are, I'd love to help and talk to you. So please visit me at mortgageporter.com or reach out directly. I'm always happy to talk. Take care. Have a great day. Bye-bye.